Alrighty, folks. One of the things I truly enjoy about the One Rental at a Time community is we get to speak with CEOs across the housing and investing landscape. We spoke with this young man about 6 months ago. He educated us on something, frankly, I did not know about, the 721 exchange. We've all heard about the 1031 exchange, but the 721 exchange is equally exciting for real estate investors. We will touch on that more here. But let's welcome Ari to the show, man. How you doing?
Michael, great to see you.
Yeah, love to see you. Love to riff with you. I really love speaking with CEOs because you are in a very unique situation, right? You are dealing with, the playing field as it lies, but you also have to make investment decisions out into the future, and some of those decisions, may look very, very different. So I'm curious where you sit, Ari. We obviously have Liberation Day. I would think it's fair to say that tariffs came out, surprised the market to the high side. We've made some decisions to go hard on China. I think currently at 245. I'm not really sure what that makes much of a difference from 145, but hey, it's 245 now. You also have a battle between Trump and Powell brewing. So what's going on in your world? What's hitting your investors? What are people talking about? What's going on?
Yeah. Well, first of all, Michael, great to see you. Thanks for having me on. And I really love speaking to guys like yourself, podcast hosts, and other kind of market observers and participants, because you guys get to spend a lot of time thinking about these issues and gathering a bunch of different perspectives. I listened to your podcast from yesterday on the Trump-Powell collision course, which I thought was awesome. It was a great history lesson and some good perspectives. Yeah, one of the most fun and challenging parts about this seat that I'm in, and frankly, all investors have as well, and you see this too, is trying to balance those decisions of trade-offs between investing over the long term, what you see right in front of you. I think, I've been listening to your views for a long time, and we at Flock, we largely agree with your approach of higher for longer. Be very prudent, like it's what is right in front of you today and what your needs are going to be for the next year and 5 and 10, and a bet on the future could be nice, but you always need to make sure you have your out and you can budget for, and be very responsible. That's the approach that we've taken at Flock. That's the approach that all of our clients have taken to get to the point where they can work with us today. So I think what's most top of mind for us right now, I think you had a line recently where you said 2025 is the year of the investor. And it's clear there's going to be opportunities in front of us. What those opportunities we don't know what they look like, but definitely if you have cash right now, and even if you don't have cash, there's way for you to create deals, which we can talk about in a little bit. But there's just a lot of any sort of time of volatility or change, there's always a lot of opportunities that present themselves. And we're seeing a lot of those right now. So it's certainly an exciting time to be running a company and to be an investor and a market participant.
I love that you brought that line up, because it's something I've been thinking about, because I knew we were going to be speaking today. Because when I talk about 2025 being the year in the investor, I most heavily lean into the people starting the journey.
Yeah.
Right. They're the people that often get scared, nervous, kind of pull back when they should lean forward. And again, why do I say, and frankly believe with every fiber of my body, that 2025 will be the year of the investor? It's actually very simple, even at an Econ 101 level. And we'll just go through it here, because I want people to feel this, right? If you are interested in real estate investing today, what do you want? More demand or less demand? Said a different way, do you want more competition or less competition? And let's be very clear, only an idiot wants more competition. So we are currently living in a world where demand is falling, and falling quickly, right? We have seen inventory build. I just saw some numbers that new listings were up 365,000 last month. Pendings were 255,000, which means we added 110,000 units. These are national numbers. That's up like 30% year on year. We're clearly seeing demand destruction. So again, it starts slow, but what is going to happen is we're going to see the second step of the year of the investor is we're seeing supply build. Like just last month with the numbers I rattled off, 110,000 more active listings. That is significant, and that will continue. So what does that mean? Again, if we go back to Econ 101, do you want more supply or less supply? You, of course, want more supply. And then the final thing to really think about is, again, in recessions, in bad environments, what I call motivated sellers ratchet up, right? So what you're going to see inside the active listings is more and more people are going to raise their hand and say, I'm done. I'm emotionally checked out. I will take a creative deal. I will take a low cash deal. I just want this thing gone. And what those are called are don't wanters. If you are an investor and you are acting in the year 2025, I want you to realize that your chances of finding or creating a deal of the decade are exponentially higher than they have been in the last 5 years. The last 5 years, the only people that won were people with cash. The people that have been doing this, they had reputations, they had pipelines to off-market deals. So again, this is what I want people to feel, right? The new investors, the people looking to buy should be excited. But one of the reasons I like Flock Homes and the 721 exchange is there are people, not everybody's starting. There are people that are looking to exit or maybe trade up or maybe become less hands off. They really want the passive versus the semi-passive. So I think there's a huge opportunity for Flock Homes to educate people on the 721 exchange, paint the vision of less headaches and trade up. So I'm hoping Flock Home is excited with this because, again, the chaos breeds opportunity.
Yeah, we're super excited. So, Michael, maybe if it's helpful, if I could give just like the quick overview for folks who didn't, I think I was on the show last year. I'll give a quick overview. And obviously, we work with retiring landlords, folks
Correct.
who are at the latter half of their career. But this is also extremely relevant to folks who are even just getting started in their career, because it speaks to a point you just made just now around being creative in 2025. Because this is the like, I agree with the vast majority of things you just said. However, I do not believe this is a 2008 type scenario where we're going to see housing prices go down by 80%. You're going to be buying these things on the courthouse steps. Like, that's not going to happen. We have the golden handcuffs. We have interest rates probably higher for longer. Even if we see a mass recession, we know that federal policy will prevent what will be, you always say you fight, the last recession, right? Like, we know no one in this country, no policymaker, no elected official wants to go back to the housing crisis that we had, or the great financial crisis that we had in 2008. And so as a result of that, I don't think home prices are going to plummet by 70%.
No, I think that's a reasonable guess. Yes.
And so as a result of that, I also, again, furthering that higher for longer, like, it's still going to be more expensive. Like, what happened after 2008, home prices crashed. Rates also went down significantly. And so you could just buy. In 2025, I don't think home prices are going to crash. I don't think rates are going to crash. So, like, how are you going to get a deal done? Mm-hmm. You got to be creative. You got to find opportunity where others aren't looking. You got to be, you got to be flexible. You got to solve problems for people. So I'm excited to tell you guys more. I know you're familiar with the exchange, but it's also relevant to not only like the retiring landlords, but also younger guys and gals who are starting their career. It's a great way to solve problems for sellers. So just at its core, I'm sure almost everyone listening to this knows the 1031 exchange. Mm-hmm. It's kind of like a real estate loophole, allows you to sell a piece of real estate, roll those proceeds, right, to purchase another piece of real estate. It's a great way to reallocate, to defer taxes and reallocate from strategy or for a new type of asset or for lifestyle reasons. It's a really phenomenal sort of wealth build. It's more of a strategic allocation kind of mechanism. The problem with the 1031 exchange is it doesn't really, if you're trying to like get out of real estate or go to passive, it just is like more headaches. It's just like more
bigger headaches. Yep. Yeah. You got to go
exactly. Yeah. The line like more money, more problems. This is like more units, more problems, or like whatever it is. Like, it's just you still own real estate. There is another solution out there, which is a very passive investment vehicle, where it's called a Delaware Statutory Trust, DST. And it's a structure. It's super complicated. There's a ton of fees involved with it. It's been around for a long time. It's quite a big industry, actually, where it allows, it's part of the tax code that says you can sell your real estate, 1031 your proceeds, and go into this like really complicated trust. And now you're passive in this trust, and you're passive with like a bunch of other people, but there's a lot of complexities. For example, you can't renegotiate a lease. You can't do additional CapEx. And it's really complicated. As a result of that, there's just like a lot of fees involved with it. Sure. But again, that's a very popular, a lot of the big private equity firms offer this. I think there were like $10 billion of DSTs done last year.
Wow.
Yeah, it's a huge, huge space, especially as this older generation of folks, the retiring landlords are, kind of getting to this point in their life where they're like, I don't want to be a landlord anymore. But I don't want to sell and pay the taxes. So that's the kind of existing ecosystem. Again, 1031 exchange, the DST as well. We're doing something called the 721 exchange. And in plain English, the way it works is if you own real estate, let's say you have $1 million portfolio with no debt on it. And you can also do it if you do have debt, but just for really simple example, if you had 3 rental properties worth $1 million, you 721 exchange, you exchange those 3 properties for the equivalent value of shares in our fund, or any fund. Frankly, you can do this with a REIT. You can do this with a lot of other firms out there. So you would, instead of just owning those 3 rentals, let's say 3 single family rentals in Texas, or a multifamily building, or whatever that is, you now own shares of a larger partnership. So you're fully passive. You get all the cash flow, you get all the returns, but instead of it coming from your individual assets, you're now an LP or a shareholder in this larger REIT or this fund. So that's kind of how the 721 exchange works. I'll pause there for a second. Any clarification questions?
No, I think yeah, I think for, I know the 721, at least at the 1,000-foot level, nothing like yourself. But the other thing to think about as an investor looking to get out of those 3 houses in Texas, you're getting into a fund that's going to have a lot more diversification, right? It's going to have a lot more assets than just those 3. And again, this is about going from semi-passive to truly passive. That's the goal here. That's not happening, to your point, with the 1031 exchange. You're just more money, more units, more problems. This is a way to transition away maybe from an equity rich portfolio that, maybe you bought a bunch of, because I know there's a bunch of people that are picking up properties in Ohio, in Detroit, and these other areas for, likely pennies on the dollar in the last crisis. Now you've had 15 years of appreciation. Those things are likely up 6 figures, maybe multiple 6 figures, but they're still headaches for you. And, this might be a thing where you're like, you know what? I'm going to take a sliver of my portfolio and go truly passive. So that's another thing that people could think of.
What you just, we kind of built this. We started in single family homes largely as a result of the dynamic you just laid out. There are so many folks out there who, some of them have owned for much, much longer, but a lot of folks who started buying in 2008, it's kind of crazy to think about. We're like almost 20 years later.
Yeah, it's crazy, right?
These people have seen so much price appreciation, and it's been so much work, and they've done so well. It's an incredible thing, the amount of wealth and value, frankly, that these people have created for themselves and their families, but also for like communities. A lot of these houses, like this is like people's legacy, their, a big chunk of their life's work. And now this is like, and the alternative, by the way, you really have 2 alternatives. You can sell and pay the taxes, which like no one does, it was tax day earlier this week. And like, if we said like, how many of you just like sold a bunch of real estate and you just paid this giant tax? Like very few of those people.
No thanks.
Like,
not on my channel.
Exactly. None of your listeners are.
No.
I didn't even make that of like, who did that? Like no one did that. So, so really then the alternative is just continue to own. And that's a problem too, because like, again, like if you're listening to this and you're retired, like you bought these things like 10, 15, 20 years ago. Even, by the way, some folks, if you bought in Ohio in the mid 2010s, late 2010s, you've still seen a ton of
Still
price
up. Yeah.
appreciation. Almost every market in this country, you've seen that appreciation. And so it's like, okay, well, like now it's time, we got to replace the roofs. Like HVAC could use a new, or like, I know my rents are low and I've had the same resident in, and it's like, I could do a value add upgrade and I'm leaving money on the table, but I just don't want to deal with this. So it really, like, the diversification element is a huge benefit for folks. Our view here, and I think you probably share this, is we have no idea which markets are going to outperform in the next 10 years. Like, the Journal had a headline last week saying like, Michigan's going to get crushed by these tariffs and stuff, or like maybe Trump reverses course and like Michigan actually like outperforms. And also it's like super affordable to buy a house in Michigan and the Midwest compared to like Texas or Florida. We're seeing crazy rising home insurance costs and property taxes. And like, so like, I don't know, maybe Michigan will outperform. I just like, we don't know over the next 10 years. So
yeah. When I really think about the investors, again, I spend a lot of time because, again, the majority of folks are just starting and getting going. But when I think about the year of the investor, 2025, I think there's a lot to this. There's a lot of learns, myself included, right? I'm in this camp. We built significant wealth. We started in 01, but, made the big jumps in 08 to 14. And, we have some assets that, frankly, were old and outdated when we bought them. Now they're 15 years older. And, they have seen significant price appreciation. But these are just considerations. People sometimes call it return on equity. I actually think about it return on stress. I've told my audience over the years about a triplex we owned on a street called Glen that was supposed to be our best deal ever. In fact, I called it the deal of the decade when I bought it. It just is unlucky for whatever reason, on the wrong street, wrong side, whatever, many tenant turnovers, 2 evictions in 4 years. And, we ended up selling that. And, we paid the taxes, back to your earlier point, because it was like when we looked at our whole portfolio, one property was 80% of our headaches. And like, well, that one's gone. But there could have been a different option. If I would have known about the 721, which I had not until we spoke 6 months ago, I would have considered it, because that might have been a better way. And I wouldn't have had to write a nearly 6-figure check to the freaking IRS, which I did not like.
Yeah. I mean, it's a super powerful exit strategy. Big REITs have been using it for a really long time. We're the first ones that have done it for single family, and we're now the largest. I think we're the largest provider. We're almost at 1,000 homes, so we're the largest provider of 721 exchanges. We're starting to expand into other asset classes. Again, this is a super powerful wealth building mechanism. It's a tax and legal structure. We've done this with hundreds of families at this point. So, but I think it's, to an earlier point that you made, just going back to 2025 being the year of the investor, I think, what the lessons you can take away from this, of like, when I started this business, again, I did this as a way to solve a problem for landlords. And I think that in any business, by the way, taking an approach of, it's not just like, do you have a good idea? It's like, can you solve a problem for people? Because if you can solve a problem for people, you can create value. And if you can create value, you can capture some of that value. And so going back to this with 2025 being the year of the investor, like, there's a lot of, this is a great way to get deals done. So if you're trying to buy an asset and you can't get the financing, this is now speaking to sort of the younger generation of folks on your show who are just starting their careers. Like, if you can't get the financing in place, and you're following Michael's rule of like, don't have negative cash flow, don't make a bet on the future, which is a rule I really like, and I think people should be following. Like, try taking a creative approach. Like, try asking the seller, "Hey, man, like, why don't we do a seller financing deal? Like, right now you've got a headache." And you're hardly cash flowing this thing either. Or maybe it's like sitting vacant. I'll turn that with zero headache and stress. We'll make this super tax efficient for you. Do an interest only seller financing deal. And then when you're ready, you can do a lump sum, balloon to then 1031 that asset. That's one great option. I love that. The seller financing, it's a super creative way to solve a problem. We love that. We've helped some folks structure deals like that. Another one, it's similar to a 721 exchange. I was I was with a guy yesterday, and there was a retiring landlord. He had his property listed for a long time, and it wasn't moving, and he had no debt on the property. And one of my buddies just went to the guy and said, "Hey, why don't you roll your equity, your asset into this deal that we'll do together? I'll put a little bit of leverage on it. I'll take recourse for it, and we'll split the profits." And so they're partners on the deal now, you know?
There you go.
And
Yeah.
it's the same sort of approach that we're taking, which is like, you know, partnering with these folks, this generation of retiring landlords who are like, at one point in my life, I wanted to deal with this. At one point in my life, I was going to be hands-on value add. I don't want to deal with that anymore.
Yes.
And I think taking that approach, you know, taking this approach of solving problems for retiring landlords is just, it's a much more powerful way to get deals done, especially in 2025.
Oh, I couldn't agree more. I think there's so much opportunity. You know, if I were to think about the audience that I work with, I would say probably 60% of them are kind of on the newer scale, 0 or 1. But, you know, there's 25% of my audience that's probably like me, right? We've been in the game multiple decades. We have a portfolio with multiple assets. I'm going to imagine a significant portion of them have at least thought about how they're going to go extremely passive. And frankly, I've done them a disservice. I didn't know about the 721 exchange until 6 months ago when you and I spoke. And I've done research since. It is an option for landlords. And maybe you're not ready to do it today, but you probably should educate yourself and just see if it's an option you want to look at, you know, if you're going to exit in 3, 4, 5 years. I have a banner on the screen right now. Are these the right things? They could send a note to info@flockhomes.com or call 720-703-9992. Both of those are good. It's a good email and a good number.
Yeah, that's great. And again, we're in the business of solving problems for folks. We started with the 721 exchange. It's by far the most cost efficient seamless exit strategy. We can put up the numbers for you, do your own research. It's like, and there's a few other providers out there, no one in single family. We're now expanding into multifamily and a few other asset classes. But I just say, if you own low basis real estate, or if you have we work a lot with brokers as well. So if you know folks, even if you don't have listing agreements and you're a broker, it's a super powerful way for you to be able to create a transaction. So if you have low basis real estate, or you know others that do, and they're like ready to be done with it, reach out. We'd love to hear from you. We'd love to hear what you're seeing in the market too. Again, we do, like I talked about that deal that my buddy just did, where he did kind of like a bespoke, a one-off 721 exchange, you know. That's something that any individual investor who's just getting started can go out and do. And there's just like a lot of creative ways to solve problem for folks. And yeah, I think 2025 is the year to pursue this, because it's a weird world out there right now. There's a lot of uncertainty, a lot of volatility, and maybe you want to go full, you got a lot of cash, you want to go like full on, full power, just like dive in. Or maybe you're like, you know, you're sort of like, I want to just kind of pause for a little bit and think about it and be prudent.
Yeah. Folks, at the end of the day, 2025 is going to be the year of the investor. There's an old saying, fortune favors the brave. Deal of the decade's done once a year. Again, if you are one of those landlords like me where you got a portfolio a little bit older, you should at least do yourself a favor and get more educated than I was 6 months ago. Learn about the 721 exchange. Is it a way you can go from semi-passive to truly passive? Again, info@flockhomes.com or call 720-703-9992. I would ask for just one favor. Let them know that you came from one rental at a time, just so that they know their Ari's time with me was worthwhile. Ari, thank you so much.
Michael, great to see you. Thanks, everyone.
Yep.